Hi, today we are going to give you information about filing a tax return through PowerPoint. Our group consists of Kim Jang-woo, Lee Jong-guk, and Chu Min-soo. Next, we will explain the table of contents and present the contents of the PowerPoint we prepared. Okay, let's get started. Content. First, reason to file a tax return. Second, filing a tax return procedure and period. Third, each country's filing tax returns. Fourth, changes in the tax return system according to coronavirus 19. Filing a tax return. Each country has various kinds of taxes. In Korea, there are taxes such as income tax, corporate tax, property tax, value-added tax, registration tax, and etc., and each tax must be reported and paid. You need to be aware of each tax return system because the reporting procedure and duration vary depending on the type of tax. Reason to file a tax return. In order to maintain the nation, the law stipulates that a portion of the people's income should be paid to the state for the development of people's lives, and that everyone should maintain fairness because the income they have worked for is different from person to person. Drawbacks of not filing tax returns. First, imposing non-payment and non-reportable non-payment taxes. Second, the exclusion of tax breaks increase that actual payments. Third, strict application of expenses handling costs become inevitable. Fourth, an individual status become unstable.
Second, filing a tax return procedure period. The procedure for filing a tax depends on the type of tax. Therefore, we would like to explain some representative tax of our country and the corresponding reporting and payment procedures. Comprehensive income tax. The comprehensive income tax is a tax paid by an individual for income earned from 1 year of economic activity last year and shall be calculated by adding a taxable income and reported and paid to the tax office in charge of the address from May 1 to May 31 of the following year. If there is no problem with the tax amount, you can call the National Tax Service 1544-9944 or report and pay through the Home Tax app and homepage. Bookkeeping record. Income tax is a tax that the business operator calculated, reports, and pays his or her own income. So our business operator must keep and record books. Simple book holder. Start a new business during the relevant taxation period, or the business operator whose total amount of revenue, including the amount of revenue increased by decision or correction in the previous taxation period, falls below. A double agent, or business operator other than the subject to simple bookholder, shall record and keep the books recorded separately by debit and credit at each transaction, and shall submit the financial statement prepared on the basis of such changes, along with the report. Disadvantage of not recording books. If the person liable for double entry does not record the books, the measured amount will be charged with additional tax. The person subject to simple books will pay 20% of the calculated tax as in organic added tax. Even if the amount of the loss occurs, it will not be recognized. Disadvantage of not filing a tax return. Various tax deductions and reductions are not available. You will be charged a heavy sales tax. There are unreported additional tax and unpaid additional tax. Also, the additional tax amount depends on the type of additional tax. Depending on the reason for the imposition, it is divided into 20% for the unreported tax amount, 0.07% for the import amount, and 40% for the unreported tax amount. If the additional tax is applied at the same time, the larger additional tax will be applied. Value-added tax. Value-added tax is a tax levied on the value-added profit obtained in the course of the transaction of goods and service, and the operator subject to the value-added tax shall collect a certain amount of value-added tax in the transaction amount and pay it when selling or providing the service. Value-added tax is reported and paid for 6 months as a tax period, and each taxation period is divided into 3 months, and the scheduled reporting period is set in the middle. Taxation periods are divided into the first period from January 1 to June 13, and the second period from July 1 to December 31. Also, the scheduled reporting period from January 1 to March 31 is divided into the scheduled reporting period, and from July 1 to September 30 of the second period is divided into the scheduled reporting period. Value-added rate by industry of simplified taxpayer. Industry and value-added ratio. Electric, gas, steam and water business 5%. Retail, restaurant and sales 10%. Manufacturing, accommodation, transportation and telecommunications 20%. Construction, real estate, rental and other service 30%. Withholding tax. The withholding tax is the tax paid to the state by the operator by collecting part of the income tax. The income subject to the withholding tax include interest income, dividend income, business income, earned income, pension income, retirement income, and other income. Method of reporting withholding tax. 1. How to go to the tax office and report directly. 2. There is a way to report directly through the National Tax Service home tax website. Period of payment of withholding tax declaration by the 10th of every month. Does the withholding tax end if I report and pay it every month at the National Tax Service home tax? No, 10% of the original tax amount paid to the National Tax Service must be paid to the local government to which the workplace belongs. Local tax can be paid electronically using e-tax in Seoul and WeTax in other areas.
Preparing your tax return for the first time can be a daunting task. Gathering all the forms, information, and receipts, and getting it all done before the deadline can feel overwhelming. We've put together a plan that you can use to tackle tax season one step at a time. That way, you aren't left scrambling at the last minute. Let's take a look. For most people, federal income tax returns and most state and local income tax returns are generally due April 15th, unless that day falls on a weekend or holiday. You should verify the actual filing deadlines by visiting the IRS and state tax authority websites. So in January and February, you should begin to receive tax forms from employers, schools, and financial institutions that you'll need in order to prepare your tax return. This means you'll have 2 to 3 months to put everything together before the deadline. You'll want to plan some time to gather and organize other documents you'll need for your tax return as well. These are documents you may have gathered throughout the previous year, such as receipts for donations, deductible expenses, and any other receipts or account statements that'll help you prepare your return. It's a good idea to keep these all in a safe place so you can easily access them when you need them. Filing your tax return early can help you get your refund early, if you're owed one. Plus, filing early can help you avoid an increasingly common form of identity theft, where thieves steal your personal information to file a fraudulent claim for your refund early in the year. So in January or February, your first step is to put your arriving tax documents in a safe place and begin to plan when you'll sit down to prepare your tax return. As your tax documents start arriving by mail and email, it's a good idea to know what you should be looking for. That way you'll know when you have all the forms you need or whether there are any missing. Some common forms you may receive include Form W-2s from employers you've worked for in the past year, or Form 1099 MISCs if you worked as an independent contractor. You should expect either a Form W-2 or 1099 MISC from any employer or client who paid you $600 or more during the year. These forms are also sent to the IRS and show the IRS how much you earned. If you're still in school, you should also get a Form 1098-T tuition statement that shows how much you paid in tuition, as well as any amounts you received from grants or fellowships. There are many other important documents or statements you may receive as well. These could include documents regarding any retirement fund contributions you made, or healthcare or welfare subsidies you received, as well as statements detailing how much interest you've paid on your student loans and statements of dividends, interest, and gain that you've earned from your savings and other investments. You should receive all of your tax documents by the end of February. To keep track of everything, you could make a list, writing out each source of income, each financial account, and any subsidies you received, checking each one off as you receive the appropriate form. That way, you'll know when you have everything you need to file. At the same time you start receiving your tax documents, you can gather up some of your own documents as well. These can include monthly bank and credit card statements, and your tax return from last year if you have one. All of these may have information you'll need to prepare your tax return. You'll also want to collect any receipts you have from charitable donations you made, and any job-related expenses or medical expenses you had, as these may be deductible. And if you didn't do it this past year, it can help to gather these documents as you get them throughout the year in a box or file. This can save you a lot of time when you're working on your tax return next year. Keeping your documents organized in one place is also helpful in case you're selected for an audit by the IRS. You should hang on to these documents for at least 3 years. Once you've got all the paperwork you need, you're ready to prepare your Form 1040, Form 1040A, or Form 1040EZ. These are your federal income tax return forms. You have a few options that can make preparing your return easy. One option is to go online and prepare your return using Free File. If your adjusted gross income, this is a specific tax term which basically means your income minus certain tax deductions. Anyway, if your adjusted gross income is less than a certain limit, the IRS has free tax prep software that can make preparing your tax return easier, with features that can help you figure out any deductions or credits you might be able to take. And if your adjusted gross income is higher than that limit, the IRS has electronic versions of the paper forms that will do the math for you. But they only offer basic guidance and won't give you the same kind of help figuring out which deductions or credits you might be able to take. If you want a bit more guidance, you can use paid tax preparation software or online tools. These tools can walk you through how to prepare your tax return and help you figure out any deductions or credits you might be eligible for. And if you want one-on-one help, you can go to a tax preparation firm or accountant. But if you choose to work with a tax professional, make sure you are working with someone you can trust. You will be giving this person access to a lot of sensitive personal information, so choose a tax professional carefully. The IRS has a directory of verified tax preparers that may help you find a verified tax preparer in your area. While this isn't a guarantee of their trustworthiness, this IRS directory is at least a good place to start. Also, keep in mind that you may also need to prepare and file state or local tax returns in addition to your federal return. Once you've prepared your tax return, you're ready to file. You can file your tax return as early as mid-January or anytime up to the April 15th deadline. However, if you know you won't be able to get your tax return filed by April 15th, you can file for an extension that will typically push the deadline back to October 15th of the same year. However, even if you file an extension, this does not give you an extension to pay any amount of taxes you may owe, as the deadline to pay your taxes is generally April 15th. If you end up owing the government money after April 15th, you could be responsible for interest on what you owe and possibly penalties as well. In addition, if you plan on filing an extension with the IRS, you may also have to file an extension with your state of residence and any other state where you're required to file a tax return. Once you've filed your tax return, you'll know if you owe money to the IRS or if you're owed a refund. If you're owed a refund, the fastest way to receive it is to have the IRS deposit the refund directly into your bank account. If you filed your return electronically, the IRS could issue a refund in as few as 10 days. Otherwise, the IRS issues the vast majority of direct deposit refunds in 21 days or less. Once you file, you can use the Where's My Refund tool on the IRS website to find out when you should expect it. You could also choose to let the IRS keep your refund and credit it to your tax obligation for the coming year. If you owe money, you can mail in a check or money order or authorize the IRS to withdraw the amount directly from your account. You can also pay using a credit or debit card, but you might have to pay a small fee to the IRS for this service. In addition, if you use a credit card, you could be charged additional interest if you carry a balance on the card. If you can't afford to pay what you owe, the IRS offers payment plans. You could also choose to delay your payment, though you'll be responsible for interest and you may be subject to penalties if you do. If you'd like to reduce the possibility of owing money on your taxes at the end of next year, you can consider working with a tax professional who may be able to offer advice and steps you can take. While organizing your documents and preparing your tax return can be time-consuming, breaking it down into steps between January and April can make it more manageable. And keeping everything organized for next year can save you a ton of time when tax season rolls around again, so that hopefully the process will be even easier.
Next, it's about United States tax.
The tax system of the United States, the U.S. tax system is largely divided into three categories. First, federal tax, and second, state tax, and third, local tax. Federal tax is income tax, capital gain tax, income tax on dividends, interest and lawyers, and partnership protocols. And second, state tax is federal tax plus sales and use tax. And third, local tax is tax to the country or county. Not all cities and counties impose the above tax. Examples of local tax are New York City, Nassau County, etc. To put it simply, the federal tax is a national tax in Korea. State tax is the state tax in which each state, a local government, has the right to taxation, and in Korea, it corresponds to local tax. And add sales and usage taxes to federal taxes. Next, personal income tax returns in the United States. In the United States, individual taxpayers are required to report their income tax by April 15 of the following year in total. The U.S. Tax Office confirms how much personal taxpayers earned in 1 year through documents W-2 issued by their employers. Individual taxpayers report to the U.S. National Tax Service all relevant matters, including income earned through level or withholding amount in Form 1040. Employers are required to withhold taxes from salaries paid to employees and pay them to the IRS, and individual taxpayers who own their own businesses or provide independent services are required to prepay their expected income taxes on a quarterly basis. And next, declaration deadline. April 15th may be extended to October 15th for extension. The deadline for reporting can be extended until October 15, but the tax must be paid by April 15. The previous deadline, and if the tax is not paid in full by April 15, a fine will be imposed. And this picture is about 1040. And next, I'm going to talk about tax forms of individual taxpayer. There are three types of taxpayer. First, single report, and second, married filings report, and third, head of household. Single report is single people calculate income tax using single registration tax rate. And married filings report is taxpayers report the income of themselves and their spouses through two income tax returns each. And head of household is reported through the impersonation if an unmarried person has a dependent. And next, I'm going to talk about changes in the tax reporting system according to Corona-19. The major tax policies each country carries out in response to the Corona-19 are extended tax return and payment deadline, exemption and deferment of Social Security contributions, tax benefits in the health sector, expanded loss deduction, and tax breaks for certain industries. First of all, the extension of the tax return and payment deadline may be extended uniformly by country, and in some cases, if taxpayers prove difficulties. In the case of Korea, in the case of corporate taxes in March, South Korea announced measures to extend the reporting and payment period for infectious disease special management areas and Corona-19 directly affected companies as well as to extend the deadline for reporting and payment if the affected companies apply. Regarding the comprehensive income tax report in May, individual business operator took measures to extend the payment deadline, while those in special disaster areas and Corona-19 victims took measures to extend the reporting period. In the case of United States and United Kingdom, the US, which has seen a sharp increase in confirmed cases every day, has extended individual income taxes and corporate tax returns to individuals and corporations affected by the Corona-19. The UK has also taken measures for corporate and income taxes, requiring companies that have difficulty paying taxes to make customized payment arrangements for corporate taxes and to extend the payment of additional taxes for all businesses by 3 months. In the case of Australia and Italy, Australia is characterized by no additional tax or surcharge. Additional tax on the taxpayer affected by Corona-19. Individual and corporate income tax payments can be extended for up to 4 months without additional charges. The payment of GST, value-added tax, and the individual consumption tax can also be extended. In Italy is implementing tax support measures that specify region and industries. It extended the income tax payments of corporations and individuals in 11 areas of red zone and extended the payment of corporate and additional taxes for tourism, transportation, and catering businesses. In the case of Norway and Canada, Canada has extended the corporate tax payment deadline for all businesses until August 31 and extended the individual income tax return deadline to June 1st. Norway extended the payment of personal income taxes for self-employed people by 7 months, while Japan extended the reporting and payment deadline for individual income tax, consumption tax, and gift tax. And other changes, the Social Security contribution reduction and deferral measures paid by employers have been realized in Norway, France, China, and the United States. Norway temporarily cut its Social Security contributions by 4%, while France allowed it to extend payments by up to 3 months. China exempt industrial and implement insurance contributions for small and medium-sized enterprises or large Hubei province companies for 5 months, while the U.S. extended the payment of Social Security contributions to employers. Some countries have offered tax benefits for health and medical workers who are struggling in the Corona-19 frontline. China exempt personal income tax on bonuses and subsidies from medical staff, and Norway took measures to ensure that pension rights of health workers who retired and returned to COVID-19 were not affected. Malaysia has allowed special income tax deductions for health and immigration workers, while Peru and Pakistan have temporarily exempt tariffs on medical and inspection equipment. The US, China, and Norway have allowed retroactive deductions instead of carry-over deductions so that they can be extended or cash can be received at a time. The US allowed 5 years of retroactive deduction for defects between 2018 and 2020, while China extended the period of carry-over deduction for losses incurred in 2020 from 5 years to 8 years for transportation, catering, lodging, and travel industries. Norway allowed 2020 losses to be redistributed to taxes in 2018 and 2019. And we got our sources in National Tax Service, and we resource video in Better Burning Habits. And if you have some question, please send me an email. And thank you for hearing our presentation.